You know other traders are making consistent money in the stock market. So, what's it going to take to improve your trading results? Another indicator? Another strategy? You might get lucky once or twice with these surface adjustments. But for lasting improvement in your trading process, what you really need is another way of looking at the charts. Get a realignment of your technical analysis skills with a trading course from TechnoTrader.
Hi everyone. Today I want to talk about the components of technical analysis, which are candlestick charts, stock indicators, market indicators, large lot versus small lot indicators, trend line patterns, trends, bottoms, tops, and so on. There are many things that you need to learn about technical analysis. A lot of times when you first start out learning about technical analysis, it's so exciting and it seems so easy. And you learn a couple candlestick patterns and you think you're off and ready to go. One of the things that is not understood very well is support and resistance and why it forms. Support and resistance offer the technical analyst a tremendous amount of information about what the price will do next. Because at support or at resistance, something happened that stopped the trend up or down. In bottoms, the support level triggers and dark pools start buying the stock at that price level because maybe they bought it there before and they still have their TWAP orders down there, or they have determined that that is the price that is best for the stock at this time based on quantitative analysis, not technical analysis. But it becomes a technical analysis support level because they buy incrementally over time and the price is very stable when they are buying. It is not volatile. It does not run in huge runs up or down. It stays in a very tight formation. That's what makes it easy to identify dark pools. So support is an area where the large lots have bought before. And when you understand that certain market participants have purchased at that price and the importance of that market participant group in terms of being able to buy more of that stock at that price level, ergo selling short into that is a bad idea. The same thing is true of resistance at the top of a trend or as the stock is topping. Topping formations form because large lots are selling against the smaller lots that are buying in late. And so eventually the large lots will overwhelm the smaller lots because the smaller lots do not have as much capital reserve as the larger lots have. It's inevitable. That's what forms tops. It's not that the selling is huge at first. A lot of times it's just what I call, it's my term, rotation. They are rotating or selling some inventory of this stock to buy another stock that they feel is at a better price and will go up better the following year. They're trying to balance their mutual fund portfolio of stocks to give their mutual fund holders a set, albeit small, percentage of profit every year so the mutual funds holders will continue to hold those funds. They're not trying to get out at the top. They're not trying to get in at the bottom. They're not trying to get the greatest percentage gain they can possibly get for their mutual fund holders. They're only trying to use quantitative analysis to get a basic low-level percentage gain for that quarter or that year. And it is pretty darn easy to do, especially during a bull market. Pretty much any mutual fund can grow 4 to 8%, no problem, without much effort on their part. All they have to do is move around and buy different stocks and sell different stocks to maintain that percentage ratio. And it's not very much. The stock market may climb 15% and you may get 4% on your mutual funds. The rest is what they take. So resistance is where dark pools or large lots start to sell as more and more retail buyers who don't realize they're buying at a top are buying, and it weighs down and causes the trend line to go flat or start to trend down or curve. A lot of times what we see is a rounding topping formation nowadays because the large lots are trying to sell, but they're not trying to force the price to go down. The dark pools would actually prefer to sell the stock as it continues to move up They are trying to slowly rotate out of stocks and not disturb price. One of the falsehoods that's running around the retail side of the market right now is that dark pools cause the huge swings. They don't. They don't cause volatility. Their slow liquidity draw is slowly recognized by professional traders and later on by HFTs, but it takes a while because they do it very carefully. Just because they're buying large lots doesn't mean that price is going to move up. Their traders and their machine learning tools that they're using nowadays hit the penny or the half penny. So they're not moving price at all. Predatory systems, opportunists, they move price. Buybacks from corporations move price because they want the stock price to move up. So they're not using a controlled bracketed order, which is what you should learn to use so that you can get in at the right price and not buy it too high. Regardless of whether you're day trading, swing trading, position trading, or long-term investing, you need to control your entry just like the dark pools do. Support and resistance offers the technical analyst a tremendous amount of information about who is buying, who is selling, and what is going on. But you have to add the right indicators to tell you what is happening. Balance of power, for instance, is a wonderful indicator that shows you when large lots are selling while small lots are buying. When that happens, BOP will turn red and it will show you that the large lots are selling even as price moves up. It's a negative divergence and it shows up on this marvelous indicator that tells you that the dark pools are selling. Now, how is that advantageous? Well, you wouldn't want to buy the stock as the large lots are selling it because at some point that stock's going to collapse because there will be no more small lot buyers and there will still be large lot sellers. The large lots control 80% of all the market activity. The small lots only control 20%. So if you have 20% of the market participant groups buying and 80% selling, no uptrend can last very long under that kind of pressure. The contrary is true also. Some industries and some stocks finally bottom. The dark pools start forming quiet accumulation patterns and their footprints are pretty evident. And that is a support level. And it's a very specific, very defined support level that the dark pools create because of the bottoming action that they do. They buy in slowly. What they don't want to do is disturb price. They don't want to buy so quickly that HFTs see it and then they spike price upward. They want to buy all the shares of stock, 10 million, 20 million, 50 million shares of stock, whatever they want to buy at that lower price, at the penny spread. Once they have all the shares of stock they want to own, they do like Warren Buffett and all the great gurus do on the retail side. They go, oh, guess what? I bought this stock. Well, then what is everybody going to do? If some giant mutual fund who has a reputation of doing good returns is buying a stock quietly and then suddenly announces they have bought this stock, all the smaller funds managers are going to run and buy that stock. All the mid-sized funds managers are going to run and buy that stock. Retail traders are going to buy that stock. All the big gurus on the retail side are going to buy that stock. And what's going to happen? The stock is going to move up. But the dark pools did not cause the run-up. After they have completed their accumulation, then the stock moves up. So what's critically important to learn with technical analysis is what does the dark pool buy zone support level look like? Because not every support level is dark pool buy zone. Contrarily, you need to know if you want to sell short or if the market is going down, you don't want to buy into a top. You want to know what the dark pool sell zone looks like. And they look different. The dark pools control all the bottoms and the bargain hunting at a certain period of time. Sure, a lot of companies are going to report year-over-year earnings that are fantastic, so it's pretty easy to beat. Plus, they can adjust and they can move expenses to the balance sheet and capitalize them, so that makes earnings look much stronger, because if they reduce their expenses by moving them and capitalizing them on the balance sheet, then all of a sudden, voila, you have a much better earnings report. That's what some of the big companies are doing. Perfectly legitimate within the GAAP accounting principles. It's part of the approval of that, so it's not illegal. But as traders, you need to understand where the dark pools are buying and where the dark pools are selling. And it is support levels and resistance levels that you miss all the time because you're using the outdated technical analysis that was written in the 70s, 80s, and 90s. In the 70s, 80s, and 90s, dark pools did not exist. Everybody traded on the exchanges, New York Stock Exchange, NASDAQ Exchange, which was fairly new at that time. So everybody got to see what everybody's orders were. So there'd be order wanting to buy 100 shares of stock, and somebody would sell 100 shares of stock to them, and then all of a sudden a huge 100,000, 200,000, 500,000 share lot would come after it. Those were the big funds buying on the exchanges. And as a day trader, you could see this and you could seize the opportunity. Day trading back then in the 90s and the early 2000s was completely different than it is today. The dark pools decided after the HFTs evolved, and they evolved out of the SOS bandits. The SOS bandits were floor traders who left the exchanges and left their companies to trade on their own at home because they had the home computers or the PC computers, and they could trade against the market makers and the mutual funds because they understood how price behaved. As we went to decimals in 2002, that changed the whole market structure. Now you had a penny spread instead of an eighth of a spread or a quarter of a spread, 25 cents, 50 cents. You didn't have that kind of spreads anymore. The spreads got really narrowed down to a penny. So what happened is the SOS bandits companies, the strongest of those companies, decided to get faster and faster computers and accelerate their speeds to milliseconds. And they asked the exchanges if they could be directly linked into the exchange so that their orders were routed at millisecond speed. When the dark pools realized that the HFTs, high-frequency traders, as they were later called, were front-running them all the time, they went to the SEC and demanded that they have the rights to have alternative trading venues that were off the exchanges. The big banks were only too happy to accommodate them, and a lot of the big banks created dark pool venues called ATSs or AT venues, alternative trading venues. They're over-the-counter transactions. They never hit the exchange. They're never routed through market makers. All of these transactions went from just like 5% of the market to almost 40% of the market today. So 40% of the market is dark pools, and the dark pools are off the exchanges, which is why the New York Stock Exchange and NASDAQ are struggling to make ends meet because they don't have those orders flowing through anymore. And you can't see their orders. They often delay them. They have the right to delay the posting of their orders or their buys or their sales until after the market closes. That's why it's critically important to wait a few hours until you check your charts, because the dark pool information isn't in there during the day. That's why day trading is so dangerous, because you can't see what the dark pools are doing. Now, the dark pools will not disturb price when they're buying, so their penny or half penny is going to be slid in there in the candlestick, and you're not going to be able to see it. You need to learn the new technical analysis. The only place that teaches the new technical analysis, called relational technical analysis, is TechniTrader. The MTA was so impressed with my work that they invited me to present it to the whole body of MTA. But my work is copyrighted, and the only place that teaches it is TechniTrader. I don't have any franchises. I don't have any dealers or anything like that. In order to get the relational technical analysis that shows you dark pool activity, what is dark pool support, what is dark pool resistance, what is a bottoming action by the dark pools or the topping action by the dark pools, is TechniTrader. You can't get it anywhere else. It is not on the internet. It is not free anywhere. This analysis tells you what support is relevant and important and what support is not. It tells you what to look for in the footprints and the patterns that you should be looking at in the candlestick patterns to recognize when you should start buying a stock or when you should not be buying a stock or when you should be selling a stock or selling short. This is vital information that is not available in the old style technical analysis books, because they were written for an entirely different market structure where there were no dark pools. So if you want to really understand support and resistance and technical analysis and how it truly works and why it works the way it does, come to our website, check out our stock market courses, read the outlines, and discover what you don't know. Because if you're struggling right now with your trading and you're losing money, It's because you don't have this vital piece of information and education. Then we can direct you to the course that is best suited for you. We are becoming a financial-based economy, and if you don't learn to trade and invest successfully on a consistent basis, you will no longer be part of the middle class of America in a few years. My students understand what's coming and how our economy is going to change, and they will be ready for the changes. Are you going to be ready for the changes? Or are you going to find yourself suddenly no longer a part of the middle class America because you don't know how to trade or invest, and you're trying to trade and invest like they did in the 80s and 90s and early 2000s? If the training you get has not been designed and written and part of the current way that the market is structured and is working, because there's artificial intelligence, there's machine learning, there's dark data, there's all kinds of new technologies coming to market, robotics, humanoid robots, all kinds of things happening in the financial markets that are structurally changing the financial markets and how they work. Do you actually believe that a robot can choose a stock better than you can? If you do, that is a very sad thing, because all you'll be doing is buying the inventory that the retail brokers want you to buy. So you might as well go buy a mutual fund and earn a couple of percentages a year. If you're serious about still remaining in the middle class or upper class of America, or even becoming wealthy if you do well and commit yourself to it, and I have students that have done so, then come visit TechniTrader, read about our courses, give us a call and ask us for information, and talk to us about your education so that we can fill in those holes and you can become financially successful and independent financially, because that is what you're going to need to do. Millions of jobs are going to be replaced in the next decade. They will be gone. I'm Martha Stokes, and that's the radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders. And certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.